Hello traders. So the markets have fallen after Donald Trump threatened higher tariffs on the European Union and Mexico at the weekend. And we've seen the major indices gap lower and stayed lower for much of the session, with the German DAX index here staying down by about 0.7% at the time of recording. Other major European indices are also lower, but US markets have turned mixed. So let's see how Trump's latest tariff threats will impact sentiment as we head deeper into the week, a week in which we'll have key economic data as well, including the inflation report on Tuesday and retail sales as well from the US, among other key highlights. Insofar as the major indices are concerned, well, the DAX has dropped to test this key area of support at around 23,950-ish or thereabouts, where we have the 21-day exponential moving average combining with the prior breakout area. This zone kind of marks where the index last broke out from to hit a new record high. So this area remains key. Below it, things will get interesting, but for as long as the index remains above the zone, the path of least resistance remains to the upside. And there is a similar price action if you look at the major indices in the US, where indices are a little bit lower, not by much, and holding near recent record highs. The S&P 500, for example, is testing support here at 6,220 area, which as I zoom in, you can see that it was former support within this short-term consolidation zone. So things will only get interesting if we start to see the breakdown of a few key support levels. But the key support remains this shaded blue area, which was prior resistance back in December and then again in February when the index hit an all-time high before dropping. That area comes in between 6,100 to 6,148. Should we get below that zone in the coming days or weeks, then 6,000 is the next key support level to watch. Now, in the last couple of weeks, we've seen the dollar stage a bit of a comeback against a basket of foreign currencies. The dollar index is now moving above the 21-day exponential moving average, testing this bearish trend line that has been in place since March. A break above this trend line would make things a little bit more interesting in the FX space, because then we will have a genuine case for a potential dollar bottom. For now, this recovery can only be treated as a counter trend move against the underlying bearish trend. Now, the dollar has come back because of concerns about inflation picking up again due to higher tariff rates. As a result, there's a chance that the Fed might not be able to cut interest rates, and that keeps the yields supported, pushing the dollar higher against currencies where the central bank is expected to cut interest rates, and among them is the pound. So the pound has fallen against the US dollar because of those expectations that the Fed is going to be a little bit more hawkish in the coming months compared to the UK central bank, where the economy has started to deteriorate again, as we saw in economic data on Friday. This week will bring the release of CPI data, both from the US and the UK, putting the cable into sharp focus. And the key level to watch is between 134.30 to 134.35. Basically this high over here, which was resistance back in September of last year, and again in April of this year before we broke above it. This level has subsequently been tested a couple of times, and so far the cable has held above it. In addition, we have a bullish trend line coming into play at around that area as well. Therefore, if the market were to break below this trend line, at that point things will start to look a little bit more bearish for the cable. And if so, then we could potentially see some unwinding of bullish bets that had been accumulated over the last several months. And in that scenario, we could potentially see the cable dip down to below June low of 133.70 initially, possibly head down to the May 2025 low of 131.40. But we'll cross that bridge if and we'll get there. For now, keep an eye on the bullish trend line. In terms of resistance, this shaded region between 135.30 to 135.50 marks the most important resistance zone to watch. This area was previously support, as you can see by the wicks of these candles, before we broke below it on Friday on the back of those economic reports from the UK. So this level is now exposed for a potential retest from below, and if we do get a retest, I would expect resistance to hold there. But if the cable doesn't find resistance here, then at that point the technical outlook would become a little bit more muddled. For more market updates and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.